Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks close in on a record high, adding to a global rally as inline US inflation and soft jobs data gives the Fed the green light for rate cuts. Treasury Secretary Scott Bessent and his Chinese counterpart are set to meet in Madrid next week with trade, security and the future of TikTok on the agenda. Chips on the table. Bloomberg understands OpenAI and Nvidia are set to pledge billions of dollars for UK data center investment. That's as they join President Trump on his state visit to the UK next week. Plus, can artificial intelligence help solve cancer? We sit down with Demis Hassabis, the Nobel laureate whose company, Isomorphic Labs, has the ambition of solving all disease. That exclusive interview in Bloomberg Tech Europe later this hour. Well, good morning and happy Friday. And equity markets on the front foot as we described the headlines, with the data coming out of the US benign, at least underscoring the ability for the Fed to go through with that cut, the first one of the year, next week. That is fully priced by the markets. The jobs data in terms of claims was higher than expected. So again, pointing to weakening in the labour market, and the inflation data looking relatively benign. You had 4 straight days of gains and fresh records across US stocks. That's feeding into a positive session in Asia, and European futures then up on the front foot, up 0.2% after the gains of 0.5 yesterday. The FTSE 100 looking to add 23 points. S&P futures after that fresh record yesterday currently flat. Nasdaq 100 futures looking to add just 2 points. But again, in the context of record highs that came through yesterday. Let's flip the board and have a look cross-asset. Moves again into treasuries. Yields were down yesterday on the back of that weaker data and expectations. The Fed now has a glide path to cuts. 4.03 right now on the benchmark 10-year. Yields just moving 1 basis points, 4.03. We're close to that 4% level for the 10-year. Do we break below that and keep that in a sustained fashion? We'll see how that evolves as well as we lead up to that decision next week. Euro dollar at 117. Brent weaker by 0.8% as the IEA worries and concerns about a surplus in the oil markets on the back of OPEC Plus putting more oil onto the market. That came through in the IEA report yesterday. Gold closing in on fresh record highs, up 0.5%. Again, on expectations the Fed will be cutting interest rates. So it has been a positive session in Asia as well. Let's cross over right now to check in with Winnie Su in terms of how the Asian equity story is faring today. Winnie.
Morning, Tom. I'm really holding my breath here right now because we're just about 0.1% away from hitting that record high for MSCI Asia, which is going to be 220.64, that level that we're watching here. And really that supportive macro backdrop, right? We talked about how it's not just about the Fed is going to ease in September, but also the series of rate cuts that we're waiting ahead for this year. But when you take a look at Asia overall, it's also the expectation for the central banks to ease following the Fed's to cut rate. And also this liquidity-driven Chinese stock rally is still going on, as well as the AI optimism that we're seeing. So speaking of which, let's take a look at how Alibaba is doing today, which is really, again, the highlight here. It has been rising for the past few sessions already, and it's just a lot of the AI front of the good news coming out of AI front. So yesterday, yes, we had that issuance of the convertible bonds to be used for this AI business, but also overnight, the upgrades around this AI model, Qwen, and reports that Alibaba and Baidu are adopting their own AI chips to train these AI models, potentially replacing the more expensive Nvidia chips. And not just China. When we take a look at some other Asia tech shares, SK Hynix, again, today's highlight here, up slightly less than 7%, but really is driving the optimism here across Asia. And that's because the company has announced that it's completed the development of its HBM4, which is the new generation of such chips. It has better bandwidth, better power efficiency. So as the company put it that way, that the fact that we have started the mass production of that is really a new milestone in the industry. So overall, this AI optimism is still the key theme in Asia today.
OK, Bloomberg's Asia equities reporter Winnie Su as we look to fresh record highs for Asian equities. And sticking on the AI and tech theme, Bloomberg has learned the leaders of OpenAI and Nvidia plan to pledge support for billions of dollars in UK data centre investments when they travel with President Trump's second state visit next week. We are told the two companies are teaming up on the project with London-based data centre business Nscale Global. Joining me now is Rosa Prince, UK politics and policy columnist for Bloomberg Opinion. Rosa, will this news then begin to change Keir Starmer's fortunes? It's been a tortuous few weeks for the Prime Minister. Do investment pledges from the likes of OpenAI and Nvidia change the PM's prospects next week?
Well, they're going to help, I think. As you say, he's had an absolutely terrible time. He had a pretty tough summer. He really came under pressure from the Reform UK party on the policy of immigration and what he's doing to stop illegal arrivals. He had hoped to reset his government going into the fall. That has not worked out so well. We had the Deputy Prime Minister and the British ambassador to US having to quit, be sacked, on the cusp of this visit by President Trump to the UK. Now, it is good news, of course. We have a budget coming up, a very tricky budget, given the big hole in the public finances here in the UK. And Keir Starmer has really been going for the growth agenda, hoping to kind of that will grow his way out of the difficulty that he's in. So he'll want any pledge he can get. Britain has long been interested in AI and the future of tech, and this is really part of that agenda. So I think he'll be very glad if these deals do come off.
Meanwhile, Rosa, of course, Peter Mandelson, the former UK ambassador to the US, pushed out, fired for his connections, of course, and his links to Jeffrey Epstein. That happened this week. He was obviously consequential in terms of planning this state visit, the second state visit. We've never seen a second state visit before. President Trump will be here next week. How much of a fly in the ointment is that? What does that mean for how things unfold next week, the fact that Mandelson would not be part of that?
Yeah, I think it is a problem. It was always going to be a gamble to appoint Peter Mandelson to this role. He's had a checkered career, but he's seen as having skills that perhaps outweighed that cost-benefit analysis. Now, I think that was probably the wrong call, as we can see now, given that he's had to quit amid scandal at such a difficult time. But perhaps the good work will have been done. Donald Trump does seem to have a soft spot for the UK. In fact, his whole administration seems to be fonder of Britain. The Vice President J.D. Vance holidayed here this summer. So let's hope things proceed smoothly. I think a lot of those deals and arrangements, like the two AI deals, would have been coming down the track for a long time. And there is a very good deputy ambassador in the form of James Roscoe, who's been there for a long time. So let's hope things proceed smoothly. President Trump will not have been happy about what happened with Peter Mandelson, not just because they get on, but of course, the reason that Peter Mandelson is standing down is in connection to the Epstein affair. Donald Trump will not want to be facing questions like that when he's traveling to the UK.
Indeed. Yeah, on the back of that Bloomberg scoop, of course, around those emails, Peter Mandelson emails between himself and Jeffrey Epstein. Bloomberg opinion columnist Rosa Prince, thank you very much indeed. As we look ahead to that state visit next week. Underlying US inflation, meanwhile, rising as expected in August, keeping the Fed on track to cut interest rates next week. We know the president's been focused on that as well, of course. Let's bring in Bloomberg's Valerie Teitel right now. Val, talk us through the data that came through yesterday and how it confirms views that next week is the week when the Fed goes.
Well, really a lack of surprises in the CPI report yesterday cemented in the market's mind that the Fed will be restarting their easing cycle next week and cut not just once, but 3 consecutive times into year end. It led a rally in the Treasury market, but this time, Tom, was more focused on the back end. We saw those 10-year yields breach below 4% for the first time since the April panic. We also saw 5-year yields trade near 2025 lows in the back end rally as well. We're getting more evidence, Tom, that traders traders are stopping out of these very popular steepener positions. Even PIMCO's CIO yesterday saying that they have been unwinding some of their 530 steepener position. They're losing less conviction in the trade moving forward. One of those reasons could have been the surprise jump in jobless claims yesterday, which led this back-end rally. Jobless claims jumped to a 4-year high, Tom. This kind of overshadowed the CPI report. The fact that this rise in jobless claims is continuing. The 4-week average is tracking higher and higher, leading to some more jitters about the labor market as we head into the Fed's decision next week. But speaking of that Fed decision, we still don't know who will be voting as a Fed governor next week. The Trump administration has pushed the appeals court to rule that Lisa Cook cannot stay on as governor while the court considers her opinion. They are pushing for the court to make a decision on that, the appeals court to make a decision on that by Monday. We also hear that Stephen Myron, his Senate confirmation hearing is tabled for Monday night in the Senate. This is so key, Tom, because the Fed's decision begins on Tuesday morning.
OK, we will watch out for that, of course. Bloomberg's Valerie Teitel, thank you very much indeed. Meanwhile, Treasury Secretary Scott Bessent is expected to discuss trade and tariffs when he meets senior Chinese representatives in Spain. The Treasury Department says he will hold talks on a range of issues with officials, including Chinese Vice Premier He Lifeng. Our China Chief North Asia correspondent Stephen Engel, who spent a lot of time, of course, in China, is in Hong Kong right now. When it comes to tariffs, look, Steve, you've followed this story for a long time in terms of the relationships between the two countries and the tariff implications. How significant is the meeting that we're looking ahead to between these two very senior politicians on both sides?
Yeah, I think it's very important because, of course, they've met in Geneva, they've met in London. Now they're going to meet in Spain as early as this weekend as Scott Bessent goes to Madrid as well as UK after that. So they've agreed to meet with He Lifeng, the vice premier of China, the counterpart on the trade negotiations. You know, He Lifeng has a ready smile. He's, seems to have built a good relationship with the U.S. delegation, and they can probably make some progress, especially ahead of what is speculated to be a Trump summit, possibly to China next month in October, in between the ASEAN summits and the APEC summits, or maybe even on the sidelines of the APEC summit in South Korea. There are a lot of potential dates, so I think they're going to kind of lay the groundwork for that potential meeting if the conditions and the mood and the tone of trade dialogue, tariff dialogue, and TikTok dialogue. They've indicated, the Treasury Department, that they're going to talk about TikTok. They're going to talk about money laundering. They're going to talk about national security issues. So again, I think it's important that these two men meet again.
OK, Bloomberg's Chief North Asia correspondent Stephen Engel on what is at stake in these meetings between China and the US and their counterparts, of course. Thank you, Steve. Meanwhile, here's what else to think about today. Nagel of the ECB will speaking at 9:15 after, of course, rates were kept on hold. And the view from markets is that nothing is coming from the ECB, at least in the months ahead, in terms of any further moves. After market, we will get that Fitch review of France, of course, as the new Prime Minister tries to form his cabinet. So the judgment coming through from Fitch later today. And at 3 p.m. we get the University of Michigan sentiment survey, so another gauge in terms of the pulse of the US economy. We will break that for you at 3 p.m. UK time. Coming up, why the ECB thinks it can deliver 2% inflation without more rate cuts. We're going to hear from an ECB council member next. Plus, in the Bloomberg Tech Europe episode of this week, we're going to bring you an exclusive interview with Demis Hassabis, the Nobel laureate who leads Google DeepMind and Isomorphic Labs. We will dive into how AI could revolutionize drug discovery. That is at 6:30 UK time. This is Bloomberg.
The risks to inflation are balanced. Nonetheless, we do live in a world that is becoming all the more uncertain. So uncertainty is on the rise on many fronts: geopolitical risks, trade tensions, and other developments across the globe. And therefore, even though we are saying that the risks are balanced, this is not a very strong argument to make because of the existence of these risks.
So with all of those risks in mind, is it sensible to keep your monetary powder dry?
It is sensible to keep our monetary policy dry, but at the end of the day, we do forecast, we do make our projections as needed, and we do expect that these things will play as per our projections.
So if you were to move again, would you need forecasts to vote to do that?
We would need additional information. There would have to be a significant difference in economic fundamentals, in economic projections, and other data. So yes, we would.
But to be clear, is October live? You could move without those projections?
One cannot preclude anything. Yes, we could move if the need arises, if there is an event in the economy that warrants a change in the interest rates.
Christodoulos, Patsalides, ECB Governing Council member and Cyprus Central Bank Governor, speaking exclusively to Bloomberg's Lizzie Burden. Lizzie joins us now, of course, for more, with some European central bank policymakers not convinced that no further interest rates, or they are convinced that no further interest rate cuts are needed to deliver 2% in inflation. That's despite, of course, new economic projections pointing to that overshoot in the next 2 years. Lizzie Burden was on the ground in Frankfurt for those projections and for the press conference, of course, and for that interview. Lizzie, so is it job done for the ECB? Can they take a victory lap at this point?
Tom, it actually looks like it is done. So we had the hold yesterday. That was no surprise from the ECB. But the red herring really was the 2027 forecast. They downgraded inflation. And, of course, that's what's crucial for monetary policy making, that medium-term horizon. And you saw the euro dropping off the back of it because of this sense that maybe the ECB was keeping an insurance cut in its back pocket for 2026. Now, when President Lagarde stood up for the press conference, she brushed off that downgrade, and you saw the euro rising, which also was partly to do with the US economic data that you were discussing with Valerie. Of course, this idea of a divergence between the Fed and the ECB. But I followed up, as you just heard there, with the Cypriot Central Bank Governor. Significantly for me, he says that the risks to inflation are balanced, and he says that that 2027 revision is not significant, and that would suggest that no more cuts are coming, even if it's sensible to keep their powder dry in case of an economic shock. Now, this, as our colleagues in Frankfurt are reporting, is the majority view on the committee. We're hearing from Šimkus, the Lithuanian. He's just said this morning it's important to keep the doors open to all possibilities. But indeed, after yesterday's meeting, you had traders pairing their bets on more easing, bringing into line the market view with the view of economists even before this meeting. And that suggests that while the rate-cutting party might just be getting going stateside, it's pretty much done here in Frankfurt.
OK, Bloomberg's Lizzie Burden in Frankfurt on the ground for us, of course, covering all things ECB with that exclusive conversation. And a reminder, the first episode, meanwhile, of the new season of Leaders with Francine Lacroix is out today. Francine visits Finland to speak with President Alexander Stubb about Finnish resilience and how his country is handling threats from neighbouring Russia. You can catch that today at 5:30 p.m. in the UK or 7 p.m. Eastern Time in the US. You can also watch it, of course, on the Bloomberg website and on the terminal. Now, some other news making the headlines today. Bloomberg has learned that NATO is preparing defensive military measures. That's after a Russian drone incursion in Poland. A source says the move is to strengthen deterrence across the alliance's eastern flank. They say there will also be a political response. And Germany is said to have decided to back a French-led proposal for a two-state solution between Israel and Palestine. Sources say Berlin will support a UN resolution that endorses the creation of a Palestinian state, as well as the right of return for refugees. But unlike France and the UK, sources tell us Berlin does not plan to recognise Palestinian statehood now. And US federal investigators have released a surveillance video as the manhunt continues for the gunman in the killing of conservative activist Charlie Kirk at a campus event in Utah. The state's governor says he's been working with attorneys to pursue the death penalty in the case. And former Brazilian President Jair Bolsonaro has been sentenced to 27 years in prison for plotting a coup after his 2022 election defeat. It's the first time a former Brazilian leader has been convicted of such a crime in a nation long scarred by successful and failed power grabs. His lawyers are expected to appeal his sentence. The US has warned it will react, quote, accordingly to what the White House claims is a witch hunt. Coming up, AI is the current buzzword for investors, but could quantum computing offer even greater opportunities? We will speak to the CEO of American quantum computing firm IonQ, which recently snapped up UK startup Oxford Ionics for $1 billion. That is next. This is Bloomberg.
Tech is integrated into every aspect of our lives, from finance to defense, AI to entertainment, and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers and the politics that shape global tech markets. I'm Tom Mackenzie in London. Watch Bloomberg Tech Europe. New episode Friday, only on Bloomberg Television.
Welcome back. American quantum computing firm IonQ recently announced a $1 billion acquisition of Oxford Ionics, a world leader in trapped ion quantum computing. The takeover has just been cleared by the UK government. The emerging field makes lofty promises, all the way from quicker drug discovery to more efficient power grids. I spoke exclusively to Niccolo, Masi, the CEO of IonQ, about the opportunities ahead.
IonQ is leading this revolution towards quantum processing units. Our machines are already doing incredibly useful things, and they're just starting on their inflection point of, I'd say, computational power. So our current system has 36 algorithmic qubits. We've announced a number of exciting partnerships in a number of different sectors, from drug discovery through to electric power grid optimization, through to material science and logistics. Our next generation chip will have 64 algorithmic qubits, and it will be the equivalent of 1 billion GPUs to simulate it. And we're really just getting started.
So the Blackwell chip is going to look aged and dated in that scenario in the 2030s, when you've got millions of QPUs.
It's going to look dated a lot sooner than that. I think by 27 we'll have 10,000 qubits in our chip, in partnership with our new friends at Oxford Ionics. Yep. And honestly, that will wipe the floor, if you will, with any other supercomputer that exists on Earth. There will be a moment in the coming years when we can turn a year of work, right, into a day or a day and a half or a week, right? And that will just be unbelievable opportunities to improve humanity's well-being.
What is the bigger picture then result of that acceleration for drug discovery in 2, 5, 10 years' time? What does the world look like in that scenario?
Well, vaccines come out a lot faster, right? If there ever is the need to have a COVID-20 vaccine, I think it gets done, in days and weeks as opposed to, a year or two.
Niccolo Masi, the CEO of IonQ, speaking to me exclusively. Meanwhile, OpenAI says it is closer to converting into a more traditional for-profit company as it nears the resolution of what have been painful negotiations with top shareholder Microsoft. The company says planned changes will give the existing OpenAI non-profit control over a new public benefit corporation. It's understood OpenAI plans to give the non-profit an equity stake of more than $100 billion in the new corporation, which is a floor that could increase. Coming up, could AI help solve cancer? Nobel laureate Demis Hassabis thinks it is possible. Up next on Bloomberg Tech Europe, we look at how AI is changing the way we fight disease, including an exclusive interview with Hassabis. That's coming up. This is Bloomberg.